Hey everybody, today is April 18, 2023, and today we're going to talk about the stock market and where I think it's headed for the remainder of the month, heading into the next Fed meeting in May. Before we begin, please read this disclaimer and you can pause this video as you read it. Okay, so last week we talked about the stock market and how I thought we were trapped, I believe we were trapped in this range basically for um, the last year, basically, right? And I made a post about it on my Twitter, and you can follow me on Twitter at EddieLux_. And basically, I made this post in early April. How I believe we're basically ranging between 4,200 and 3,800, right? With the occasional deviation from the range, but for the most part, for about the last 11 months, we've basically been going sideways, right? And last week I updated with the CPI report last week. Basically came out as expected. You know, we did see inflation tick up just a little bit, but it wasn't like anything out of the ordinary. So the market pretty much reacted neutrally, and so we basically just have been staying relatively flat for the last couple sessions, right? So I believe what we'll see next is the market slowly grind up higher and retest this resistance level at 4,200. And of course, this is a level that we've had trouble breaking. Obviously, we tried to break it above of last summer, but we had a massive rejection that actually went below our support level, right, before we broke back into this range again. And from then, we've basically been bouncing sideways, right? And also, take a look at this, right? Not only do we have this range that's bound, but also the Fibonacci level is also at a similar level, right? We kind of broke above. The resistance was a little higher than 4,200. This is a SPY that tracks the S&P 500. It's an ETF. And so we also got a rejection off the 200-day, right? But now that we're above the 200-day and we found support on these Fibonacci support levels, I do believe that if we are able to break up above this local high around 4170 or 417 on the SPY, I do think that we're going to come up and retest this Fibonacci resistance level that was rejected last summer, right? So that is what I think is going to happen in the short to medium term. But of course, we have the Fed meeting in early May. So based on the CPI report, inflation again was as expected from analysts, but it didn't have a big drop as people were expecting, right? So I've discussed this in the previous videos, how I do think that we might still get another 25 basis points rise in interest rates, right? Some people have even gone on to say that we might get a 50 basis points rise. I do think that we will likely get a 25 basis point rise and maybe another 25 basis point rise in the next Fed meeting after the May meeting if inflation doesn't fall faster than expected. But I do think that terminal rates will be around just over 5%, right? So right now we have around about 4.65 as of March, right? And you can see how the rates have had this really steep acceleration, right? One of the fastest rate hikes we've seen in decades, right? But we're definitely nowhere near the historic highs. Also, I want to show you that we still have a 2 and a 10-year yield inversion, a yield curve inversion, right? And every time historically we've seen a recession follow. So that's another thing, right? But what we're seeing right now with the jobs report and CPI report is that the economy is actually quite strong, right? Our unemployment rate is still pretty low. So technically, we still have a strong economy despite inflation being high, despite rates being high. So even though the yield curve is inverted, we might see a more delayed reaction to a recession if there is a recession, or that maybe if there is a recession, it might be a rather shallow recession that is not as bad as people expect, right? But just keep this in mind, I know I'm pretty bullish on this channel compared to other people. I do think that we will eventually break out of this range that we've been in for a year and go up to and retest new all-time highs, right? But it's always good to think about possible bearish scenarios, to think about what could happen if I'm wrong, right? And of course, we have this, inverted yield curve, which historically has led to a recession, right? That is looming. That is a potential headwind. So that is just something to think about as we go ahead with our analysis, right? Now, the fear and greed index is still doing pretty good. It's not an extreme greed yet, so there's still potential upside before we think about we might consider thinking about taking some profits, right? But yeah, there's really not much to talk about this week. Obviously, the big news is going to be the anticipation of the Fed meeting in early May, right? So I suspect that unless we have a extreme exogenous event, maybe not extreme, just any sort of exogenous headline, I don't think we will see anything that's going to shock the market in the short term, right? Because the narrative mostly has been around inflation and rates. Now, of course, it is earnings seasons, and so far we've had pretty good earnings from banks, right? JP Morgan had a really spectacular earnings, and Bank of America recently, just today actually, reported pretty good earnings. And of course, we have to look ahead and see how the tech stocks do, right? Because tech stocks are a big part of the S&P and of course the Nasdaq. So if the tech earnings aren't really great, people talk about earnings recession from tech stocks, then that could put downward pressure on the S&P and of course the Nasdaq ahead of the Fed meeting. But I do think that overall, the most important narrative that will affect the price of, affect the stock market is going to be the Fed meeting in early May. So yeah, I'll continue to update the charts and also videos based on how the earnings come out and how it affects the markets. But for the most part, I think that the most important catalyst right now is the Fed meeting in early May. So I do expect, unless earnings are completely terrible, I do expect the market to continue to go sideways. But I do think that unless earnings are horrible, I do think we'll stay near this upper part of the range, right? Let me go to the over here. So if earnings are spectacular or the Fed doesn't hike as much as people expect, we might see finally a break above. But I do think this is going to be some strong resistance over here, just because we've had hard time breaking above over the past year, right? Yeah. So anyways, that's it for today's update. Really not much to talk about. I'll definitely update more charts on Twitter on Thursday, and of course another video next Tuesday based on how the earnings come out, especially tech earnings that we're all anticipating, right? I think Tesla is going to come out very soon, and Tesla, of course, is a big part of the S&P and the Nasdaq, and yeah, other earnings will come out and see how we affect the direction of the market in the short term. And of course, as we get closer to the Fed meeting in early May, we'll definitely discuss that and how it affects the market, and we'll come back and reassess and see if the market is able to break above this resistance area at 4,200 and continue to all-time highs, or if we're going to plunge possibly below and continue downwards. Thank you for watching this video. If you found it helpful, useful, or informative, don't forget to like this video, leave a comment below, and subscribe for updates. Appreciate all your support. Thank you again, and have a great day.